Hi everyone, very good evening. So welcome to another session of cost accounting revision. Welcome you all. So please join in quickly so that we can start with the session at the earliest. And all those who are live, please let me know if audio video is clear to you. Good evening, Ranjana. Yes. Good evening, Vedant. Yes, please let me know if audio video is clear. All clear? Done. Okay, so today we'll be doing process costing first because that is a more important chapter. And if there is a time, then we'll do the unit and batch costing also. But I want to cover the bigger chapters first now. Process costing, then joint and byproduct, standard, marginal, budgetary and service. Right, so I just want that in the next 3 to 4 days we are able to cover all the chapters once. Because the thing is, next week I'm going to be busy, so I want to cover these chapters at the earliest. Okay, all those who are live, guys, please like the video. Please, all those who are live right now. Quickly, then we'll start with our session. Okay, so let's start with our session on process costing. Again, a very important chapter, but extremely interesting and I would say not that difficult, isn't it? First and the foremost thing in process costing, that sir, where is it applicable? So process costing is mainly applicable in the manufacturing industry. Right, it is mainly applicable. It is mainly applicable in manufacturing industry. Right, mainly applicable in manufacturing industry where a product is manufactured in the various processes. Process 1, process 2, process 3. For example, if we take a very simple example, if you have to manufacture this shirt, is it only one process? No, sir. There are multiple processes. There are multiple departments through which this product has to pass before it is completed into a finished product. First, it's a raw material. The cloth, it is a raw material. Then you will have a cutting department where the raw material or this cloth will get cut. Right. Then you will have what? Then you are going to have a tailoring department where it will get tailored. Right. Then you will have a pressing department, then you will have a finishing, packing department, then you will have a finishing department. So this product is passing through the various processes. So process costing is identifying the cost incurred Thank you for identifying the cost incurred in each process where the product is manufactured through the various processes. Now we want to find out what? We want to find out that what is the cost incurred in each process. In every process, there will be a certain cost. Broadly, three types of cost will be there: material cost, labor cost, and overhead cost. In each process, what is the cost? That is what we want to know. For that, what we prepare is, we prepare this process account. So process account is prepared for every process. Process 1, process 2, process 3, right? Process account. So here we will have, if it is a previous process. Okay, first I'll take a very first process, process 1 account, right? First I'll take up what? I will first take up that how we prepare process 1 account. Okay, what will be there in the process 1 account? Now, what is the initial thing that you will do? The first thing that you will do is you will introduce the raw material, right? So first thing that we will have is raw material. So you'll write here to raw material. How many units you have introduced? At what rate you have introduced, and what is the amount of raw material? Now, then there will be labor cost. Then you will write the labor cost here under the amount. Then if there are any direct expenses, we'll write the direct expenses. If there is overheads, any other overheads, we will write overheads here, right? Now this is the process 1 account. In this process, this is the total cost incurred. This is the total cost incurred in this process. And what is there? If you have incurred a certain cost, you will get a certain output from it. That output will be transferred to the next process. So this here we will write by next process account or process 2 account. By next process account we are going to write here, right? So this valued at this total cost, how many units and total cost. One thing in the whole of process costing that you have to remember, sir, whatever you are going to input here, these are your input units, right? These are your input units. You have to give the detail that what happened to these input units, right? So what we are saying is that your input should be equal to your output. Your input should be equal to your output. That if you have input 10,000 units, if you have input 10,000 units, then what is the output? What happened with these 10,000 units? Sir, out of these 9,000 units were transferred to the next process, right? But there can be a certain loss also. There can be a certain loss also. So we'll talk about that normal loss, abnormal loss, and everything we are going to talk about. Clear? This is process 1 account. Now, if you prepare process 2 account, this will look like something like this. In the process 2 account, the first thing that you will record is to the previous process, that whatever is the cost incurred in the previous process, that is being transferred to process 2, right? You will record here to previous process, quantity, rate, and amount. Then in this process also, you will incur a certain various cost. Material cost, labor cost, expenses, overheads, right? Now from this process you will transfer it to the next one, that is to FG or next process account. You'll write here to FG or next process account. Similarly, we can prepare n number of accounts, process 3, process 4, and all those accounts. So this is all about the basic process account. Right? Now, as I told you that when we are preparing the process account, we have to give the input should be equal to output, right? That if you have input 10,000 units, out of this 10,000 units, how many units you are able to manufacture? It is not necessary that you will get an output of 10,000 units only itself. There is a possibility of some loss also. There is a possibility of some loss also. Yes, sir, there is a possibility of a certain kind of a loss. Now, if you talk about loss, there are two types of loss. One is your normal loss. Another one is your abnormal loss. Let's see. What about the normal loss? Normal loss also has two cases now. Okay, I'll write here. If we talk about normal loss, normal loss will have two cases. One, we talk about that if there is no scrap value, and another case is that if there is a scrap value. So what will happen if you have input 10,000 units here, right? Here you will write here by normal loss. You will write here units. What is the number of units of normal loss? If there is no scrap value, you will not write anything in the amount column. If there is a scrap value, you will write here in the amount column. See there. If you see the process account here, normal loss here on this side, we have recorded normal loss, quantity, rate and amount. This amount is what? This amount represents if there is any scrap value, realized from the normal loss. If there is no scrap value, then fine, we will keep this empty. We will not write anything in the rate column and we will not write anything in the amount column. Very simple. This is about the normal loss. So if normal loss has no scrap value, then only the units of the normal loss will be credited and the burden of the normal loss will be shifted to good units. So who will bear the cost of normal loss? Right from the very first lecture I've been telling you, if there is a normal loss, who will bear the burden? The good units. That is the cost of these units which are being transferred to the next process. The cost of these units will increase, because what we are saying is in case of normal loss, the cost will be borne by good units, right? And if the normal loss has a scrap value, then the units along with the scrap value of normal loss will be credited and the burden of remaining cost of normal loss will be shifted to good units. Let's say there is a normal loss of 100 rupees. If you are able to recover 20 rupees out of it, right? So what is the net normal loss now? 80. Now the burden will be 80 rupees and not 100 rupees, right? So burden, it will be a reduced burden for the good units. That's the only thing for the normal loss, right? So this is the treatment of normal loss that we do. Okay, first let me know if this much part is clear. If the normal loss part is clear to you guys, any doubts in the normal loss part? Please let me know if you have any doubts in the normal loss part. Clear? Okay, thank you. Now we'll come to the abnormal loss now. Now there can be an abnormal loss also. Yes sir, there can be an abnormal loss also, right? So what we are going to do in case of abnormal loss, how to treat abnormal loss, that is something very interesting. Okay, let's talk about abnormal loss now. Now listen to it very carefully. Listen to it very carefully that what we will do with the abnormal loss. I'm going to prepare a process account. I will prepare a process account to explain this. Just one example and everything will be clear to you. Now, in case I'm saying I have input, right? Abnormal loss treatment. Here I say I input to material 1000 units I have incurred at the rate of 12 rupees. So this cost will be 12,000 for the material, 12,000. Then I will take two other expenses, which includes labor and overheads and everything, right? Other expenses of, let's say, 8,000. I have a normal loss of 50 units. I have a normal loss of 50 units on which I will get a scrap value of 2 rupees. That means 100 rupees is the amount of scrap that I'm going to get. After that, I'm saying to next process, that the transfer to next process is how many units? I'm saying 910 units are being transferred to the next process. As I told you, this input of 10,000, sorry, 1,000 should match with the output of 1,000. Right? You have to keep a record that what happened with this 1,000 units. So here, if you have input 1,000 units, your output should also be 1,000. So what you are saying, out of this 1,000, 50 is your normal loss, 910 you have transferred to the next process. So what about the remaining 40 units? That remaining 40 units is your abnormal loss. So we'll write here by abnormal loss. That is 40 units. Right? Now, what to do? We have two values to calculate. We have this value also to calculate, right? Abnormal loss and next process. So in this case, what we normally do is we calculate the cost per unit of normal output. So what we have calculated is cost per unit of normal output, that under the normal circumstances, what will be your cost? We say that, sir, the total cost incurred will be 20,000, 12,000 of material and 8,000 of other expenses. 20,000 is the total cost being incurred. Out of that, 100 rupees I will recover as a scrap for the normal loss, divided by input is 1,000 minus normal loss units, that is 50. Right? So you will calculate one rate here. So this rate will be 20,000 minus 100, 19,900 divided by 950. That comes to 20.95. So this rate comes to 20.95. Now at this rate, we are going to value our abnormal loss and the next process. 20.95 and 20.95. So 40 into 20.95, that comes to 838. And the remaining value you will put, because of decimal there can be a slight difference. So what you can do is you can just put the remaining value 19,062. So here it will be 20,000 cost and here it will be 20,000 of cost. Clear? So what we have to do is we have to calculate the cost per unit of normal output. Normal output means total output minus normal loss. That is, under the normal circumstances, what is the output that you are expecting and what is the cost that will be incurred for that output. Is that clear? Now, very interesting point here. Sir, for the normal loss, scrap value, we are recording it in the process account only. What I'm saying is, scrap value of the normal loss, we are recording in the process account. Sir, what about the scrap value of abnormal loss? What to do? Here we are not recording the scrap value of abnormal loss. Here we are recording what is the total value of the abnormal loss. Sir, what if we are getting some scrap out of it? What if we are getting some scrap out of it? If we are getting a certain scrap out of it, that will be recorded not in the process account, but it will be recorded where? It will be recorded in the abnormal loss account. So after process account, what you will prepare is, after process account, you will prepare abnormal loss account. Right? So what will be there in the abnormal loss account? In the abnormal loss account, you will record here to process account, abnormal loss of 40 units at 838. And if you are recovering, let's say 2 rupees or 3 rupees you are recovering, out of it 3 rupees you are recovering, so that you will take it to buy bank on 40 units. 3 rupees is your scrap value, so 120 rupees you will receive it as a scrap. The remaining you will take it to where? The remaining loss is taken to costing P&L account. Costing P&L account, that is 838 minus 120. 718 rupees you will take it to costing P&L account. Clear? So scrap value of the normal loss will be taken in the process account itself, but the scrap value of the abnormal loss will be taken to costing P&L, in the abnormal loss account, and the balance will be taken to costing P&L. See here, the treatment of abnormal loss, the units of, read it very carefully, the units of the abnormal loss will be credited to process account. For the calculation of value of abnormal loss, cost per unit of normal output will be calculated as follows. Total cost minus scrap value of normal loss divided by total input units minus normal loss units. Right? That you will record. Now I've prepared the abnormal loss account here to process account by bank. That is the scrap value. The remaining amount will be taken to costing profit and loss account. This is the treatment of abnormal loss. Right? This is the treatment of abnormal loss. Yes. Any doubts in the abnormal loss, guys? Please let me know if you have any doubts in abnormal loss. Let me know if you have any doubts in abnormal loss. So you have to be here. The main important point where you can commit a mistake is with regard to scrap value, right? The main important thing here is regarding the scrap value. That is very important for you to remember, right? That scrap value of normal loss, is credited in process account, and for the abnormal loss, scrap value for abnormal loss, it will be credited in abnormal loss account. It will be credited in abnormal loss account. Right? This is an important area that you must remember, because of which there can be a mistake. Clear with the abnormal loss? Let's move to the next part, that sir, there can be an abnormal gain also, right? So what is an abnormal gain? How to treat abnormal gain? That we have to see now. So next we are going to talk about what? Next we are going to talk about abnormal gain. Next we are going to talk about abnormal gain. Now what is an abnormal gain? Abnormal gain is a situation where we are expecting a certain loss, but it didn't happen. We are expecting a normal loss of 10 units, but the actual normal loss is only 8 units. So those 2 units which turned out to be good, which we were expecting to be a loss, it turned out to be good. So that is my abnormal gain, because as per the past experiences, I was not considering it that it will come out to be good, but then it came out to be good. So that is my abnormal gain. Clear? So abnormal gain is what? That normal loss is less than expected. So this we can say, what is abnormal gain? It is the normal loss which is less than expected. Right? Normal loss less than expected, it turns out to be an abnormal gain. Now, what is the treatment of this in the process account? What is the treatment of this in the process account? Let's see that. Again, I'll take that same example, that to material. I'll take here to material. 1000 units input at 12 rupees, 12,000. To other expenses. So other expenses, I'll take it as same, that is 8,000. Then by normal loss, 50 units, 2 rupees scrap, 100. By next process, it is 970 units which are being transferred to the next process now. Right? So you input 1000. What is the output that you are getting? 1020. So that means 20 is what? 20 is your abnormal gain now in this case. So you have to write it here to abnormal gain. To abnormal gain. Now you have to find out 20 units. Now you have to find out this value and you have to find out the next process value. So in case of abnormal gain, what you should do is, in case of abnormal gain, always take the total of cost before the abnormal gain. Here 20,000. That is your normal cost. You must take the total of the normal loss, that is before abnormal gain. Clear? Then again we will do the same thing. We will calculate what? We will calculate the cost per unit of normal output. So again we will calculate cost per unit of normal output. Right? Cost per unit of normal output. So normal output means 20,000 of normal cost, total cost, minus 100 rupees of scrap value divided by 1000 minus 50. Right? So this will come to same 20.95. So at this now, I'm going to value this, that is 20.95. I'll record here 20.95. So 20 multiplied by 20.95, that will give you 419. So the remaining value, so this value will be 20,319. This is your abnormal gain, the treatment of abnormal gain in the process account. If you see here, I have already given this, the units of, what is given, the units of abnormal gain will be debited to the process account. For the calculation of value of abnormal gain, the cost per unit of normal output will be calculated, right? So here if we see the abnormal gain, when I am writing the abnormal gain, I write one total cost column before the abnormal gain, right? This cost will be used for this purpose, this one, 20,000. Is it clear, guys? Any doubts in this part? Tell me. Is the abnormal gain? Then I'll, okay, if there is now a scrap, if there is a scrap value given for abnormal gain also, right? If you can scrap it, there was a normal loss, right? But the normal loss is less than expected, but those units are still not saleable. Those units are still not saleable. So what will you do? You can scrap it. So if there is a scrap of abnormal gain also given, then what will you do? In that case, what you have to do is, we'll take it in the abnormal gain. You'll write here by process account. And abnormal gain is what? Abnormal gain is reduction of normal loss. So they say if there is any scrap value, if there is any scrap value that you are getting, you will debit it to the normal loss. You will reduce your normal loss by that amount, right? Scrap value, SV means the scrap value here, right? So here you will not take bank, you will take normal loss, that you are reducing the value of your normal loss quantity rate amount. The rest will go to the costing P&L account, because abnormal loss, abnormal gain, any kind of abnormal item will always go to costing P&L. Yes. Is that clear, everyone? Okay, this abnormal loss, abnormal gain and everything, it is clear. So this is all about the process accounts, right? Yes. This is all about the process accounts now, preparation of process account. So after this, let's do one question on this preparation of process account, which is an important question and which has been repeated in the exams. So I'll take up that question from the module. Clear, everyone? Yes, everyone clear with this? Fine. Okay, let's come to the question then. Which question we should take up? Let's see. We'll take up illustration number 3. Come to illustration number 3 from the module. Right, and this question they have repeatedly asked in the exam in case of the process accounts. Right, they are repeatedly asking this question. So mark it as very important, this question number 3, and it is not like they cannot ask it in the future. Definitely they can ask this question in the future also. So RST Limited processes product Z through two distinct processes, process 1 and process 2 account. On completion, it is transferred to finished stock. Right, so process 1, process 2 and then finished stock account. From the following information for the current year, prepare process 1 account, process 2 account and the finished stock account. This is what we have to prepare. What is given? Process 1, raw material used 7500 units. So this is your input. At what rate? 60 rupees. Transfer to the next process of the finished stock 7050 units. You have input 7500, but transfer to next process is only 7050 units. That means there will be a certain loss. For sure there will be a certain loss. Then normal loss on the input is given 5%. So 5% of 7500. Direct wages given, direct expenses given, manufacturing overheads given. Realizable value of the scrap per unit is 12.5. Right, realizable value of the scrap is 12.5. Now if you see the process 2, if you look at the process 2, then what will happen in the process 2, sir? What is there in the process 2? In case of process 2, the input of the raw materials is not given. Why? Because the output of the process 1, this will become the input for process 2. Then there will be a normal loss, then all the expenses, and what is being transferred to the next process or the finished goods account, that is given to you 6525 units. Right. Okay. So let's see. After that, say the 6000 units of the finished goods were sold at a profit of 15% on the cost. Some of the units are being sold. Assume that there was no opening or closing stock of WIP. So you have to prepare all the process accounts. So let's talk about process 1 account. In the process 1 account, the first and the foremost thing that you have to write is always the input. Input means the material, right? So how much of the material you are inputting? 7500 at 60 rupees. So 7500 into 60, you will get 4,50,000. Then there is other cost being incurred. The other cost means direct wages of 1,35,750. Direct expenses. See here, direct expenses are given 60% of direct wages. So 60% of this. And the manufacturing overheads are given as 20% of direct wages. Correct. So this is 20% of direct wages. Clear? Then you have what? Then you have a normal loss. What is normal loss? Normal loss is given as 5% of input, 5% of 7500. So 375 units. And is there any scrap value given? Yes, sir. Scrap value of 12.5. Now listen to it very carefully regarding the scrap value. When it is only mentioned scrap value 12.5. Now whether it is for the normal loss, whether it is for the abnormal loss, if nothing is mentioned, then this scrap value of 12.5 is applicable to all the losses. Whether it's a normal loss or whether it's an abnormal loss, it will be applicable to all the losses. Always remember this, right? If it is specifically mentioned that scrap value of the normal loss is this, then it will only be a normal loss scrap value. If nothing is mentioned, then it is a scrap value for everything, for normal loss, for abnormal loss, for everything. This you have to remember. These small points are going to make a difference in exam, right? Okay. So normal loss is there 375 units. Next process account, it is given 7050 already given. Then what about the remaining, sir? You have input 7500 units. So 7500 minus 370 minus 375 minus 7050. The remaining 75 units is your abnormal loss. Right, so for the valuation of abnormal loss, they have calculated cost per unit of completed units and abnormal loss. Total cost, this total cost minus this scrap value divided by input units minus the normal loss units. So 96.7947, this is the value that you will be getting. So you will value the 75 units as well as this 7050 units at 96.7947. Is the process 1 account clear? Any doubts in the process 1 account? Yes guys, any doubts in the process 1 account if you have? Please let me know. Clear with the process 1? Okay. So let's come to the process 2. Now, when you are preparing process 2 account, the first and the foremost thing that you have to write in the process 2 account is whatever the value that you are getting from process 1 account. Always write that as the first value. So from process 1 account, what you are getting? This 7050 units that you are getting here. 7050 units you are getting from the process 1 account at what value? 6,82,403. After that, you will write the rest of the things. What is your direct wages? What is your expenses? What is your manufacturing overheads? Right. Now, take the total up till this point. Up till manufacturing overheads, write down your total. That is 6,82,403 plus 1,29,250 plus 84,013 plus 19,387. So this comes to 9,15,053. Now what is given? Normal loss. Normal loss is given 10% of input. What is the input for process 2 account? The input for process 2 account is this 7050 units. So 10% of this 705 units is the scrap value given. Yes sir, scrap value is given as 37.5 rupees. So we'll take it as 37.5. This is the scrap value. And the transfer to finished goods is given as 6525 units. 6525 units. So finished stock 6525. So here you are getting an abnormal gain of 180 units. Here you are getting an abnormal gain of 180 units. Again, you will calculate what? You will calculate the cost per unit of normal output. Total cost 9,15,053. So this is what? That is why I told you in case of abnormal gain specifically, you should take one total before the abnormal gain itself. That will definitely help you out. Minus the scrap value of the normal loss divided by input minus normal loss, you will get a rate of 140.0496. You will value your abnormal gain at this and you will value your finished stock at this value. Right, so this is your process 2 account. Now from this process 2, you are transferring it to finished stock. So here they have taken it to finished stock account, that what you are getting from process 2, 6525 units at 913,824. What is the cost of sales? Now 6,000 units you are selling, right? So 6,000 units into the value. Now this is the cost at which it is being transferred from process 2. Out of that 6,000 units you are selling, so remaining units 525 units will be there in the stock. So this is your finished goods account that they have prepared, right? This is your finished goods account that from the process 2 we received 6,525. Out of that we have sold 6,000 units. What is the cost of those 6,000 units which we have sold? Remaining carry forward to the next period. Then they have prepared what? Then they have prepared an income statement. In the income statement they have taken the cost of sales. Now what is the sales here? What is the sales here? Sales here. Read the question very carefully. What is given? 6,000 units were sold at a profit of 15% on cost. What is the cost here? cost here is 8,40,298. So sale value will be plus 15%, 9,66,343. This much is clear. This is the cost, right? The sales value represent what? The sales value represent plus cost plus 15% profit on it. So this is your sales value. Now next, in the income statement, what else you have to take? Sir, here you will take your abnormal loss and abnormal gain, isn't it? In the first process, there was an abnormal loss of 75 units, right? So 75,000 units valued at 96.7947. But what will you take it to the costing P&L? Will you take the whole value to costing P&L, 76.7947? Will you take the whole value, or is there a scrap value of 12.5? Sir, there is a scrap value of 12.5. So that is why the income statement, they have reduced this 12.5, which is your scrap value. Right? So this income statement is nothing but your costing profit and loss account. It is nothing but your profit and loss account, costing profit and loss account. Right? So cost abnormal loss. Similarly, whatever the abnormal gain you are having, 180 units valued at 140.0496, but you are getting a scrap value of 37.5. So this you will reduce. The remaining value only will be taken to costing P&L. So remaining value costing P&L. So you will get a net profit, or it can be a loss also. Is that clear, everyone? Now, in this case, if you have to prepare an abnormal gain account, how it will look like? Have I prepared here? Okay. If you have to prepare an abnormal gain account in this case, because they can ask you abnormal loss and abnormal gain account. Loss account, I know you will be able to prepare, but sometimes there is a confusion with regard to the gain account, right? So what will you write here? In case of gain, you will write here by process 2 account, 180 units valued at, what is the value here? 140.0496, 0496. So what is the total value here? So 180 into 0. What is the value taken? 25,209. 25,209. Now, whatever is the scrap value, how will you record scrap value here? See to it very carefully. So here we will write to normal loss. 180 units at 37.5. So 180 into 37.5. So that is 6,750. The remaining value will be taken to costing P&L account. To costing P&L account, that is 25,209 minus 6,750. That is 18,459. See, 18,000. Where is income statement? 18,000. This is the value that they have taken. 18,459 rupees. Right? This is your abnormal gain account, which they can ask. So in case of abnormal gain account, this is where you have to be careful, that you have to adjust it. The scrap value is to be adjusted against the normal loss, right? It is to be adjusted against the normal loss. Okay, let me know if it is clear, guys. Any doubts in this? So we are done with this first part, that is the preparation of process accounts, that we are done with. Clear? Okay, so next topic, which is very, very important, is valuation of WIP in process account. So next we have is valuation of closing WIP. In this we will get FIFO method and weighted average method. I'll come to that later on. Right, so I've given all the formats here. I've given the detailed formats here to you. First, I'll talk about the basics here. Valuation of WIP. First, we'll talk about the basics. Right, first we are going to talk about the basics. Valuation of WIP. Now, this valuation of WIP is broadly divided into three different parts. It is broadly divided into three different parts. The first part is we prepare, the first step is we prepare statement of equivalent production. Statement of equivalent production. Then the second step is the statement of cost per equivalent unit. Statement of cost per equivalent unit. Right, the first one is statement of equivalent production. The second one is statement of cost per equivalent unit. The third step then is the valuation of closing WIP. Valuation of closing WIP and FG and plus preparation of process account. Preparation of process account. Right, so these are the three steps normally what we take. Now first let's talk about what is your equivalent production. First we are going to talk about the concept of what is equivalent production. Equivalent production. Right, that what is equivalent production. Sir, in case of equivalent production, what we say is, let's say you have input 1000 kg, right? So as I told you, in the process costing, your input should be equal to your output. So input is 1000. So what you have made out of this 1000, let's say what we say is out of this 1000, 800 kg is fully processed. Right, 800 kg is fully processed, that is it is complete, it is 100% complete in all respects. So that means, it means what? It means 100% of the cost is incurred. 100% of the cost is incurred. Material cost, labor cost, overhead cost, any cost which is to be incurred is incurred. The end. Sir, what about the remaining 200 kg? For the remaining 200 kg, they say it is 50% complete. It is 50% complete. Now, what is the meaning of 50% complete here? It doesn't mean that 100 kg is fully processed. No, sir. It means that the cost, whatever is the cost to be incurred, 50% of that cost has been incurred. Right? This 50% complete doesn't mean that 100 kg is complete. No. This 50% complete here means whatever is the cost to be incurred, 50% cost has been incurred. Right? So this 50% complete meaning is that 50% of the cost is incurred, or what we can say here is that cost equivalent to 100 kg is incurred. If 50% is incurred, that means whatever is the cost which is to be incurred on 100 kg, that much is incurred. Right? Now this 50%, right, is what we call it as degree of completion. It is called as degree of completion. Right? And this 100 kg is what we call it as equivalent production. This is what we call it as equivalent production. Right? So for this 50% complete degree of completion, for this fully processed 100% cost incurred, that means the degree of completion here will be 100%. Right? So degree of completion for the finished goods, that means the goods which are fully processed, the degree of completion for those goods is 100%. Right? So what will be the degree of completion for WIP? That I will talk about. Now, regarding this degree of completion, for the finished goods, it is always 100%. What about the degree of completion for WIP? For WIP, there can be two different scenarios with regard to this. What can be the two different scenarios? That one is degree of WIP, degree of completion for WIP, it is given in question. Right? This is for closing WIP, that 200 units are still in the process. Right? So how much is the cost incurred? What is the degree of completion? Given in the question, take that. If it is not given in the question, if it is not given in question, then what is the degree of completion that we have to take? If it is not given in the question, then degree of completion that we'll take is for material, we'll take 100%. And for labor and overheads, we'll take it 50%. This labor and overheads is called as what? This labor and overheads is called as conversion cost. Right? This labor and overheads is what we call it as conversion cost. Right? That what is the cost incurred to convert the material into finished goods. So this is called as conversion cost. Now, what is the logic behind taking material as 100% and conversion cost as 50%? See, in a process, if you are going to manufacture a particular product, what will happen? The material you will normally issue at the beginning of the period. Only then the processing will start. Let's say you are a CA student. When you are starting with your preparations, what is your raw material? Your raw material is your books. You will order all the books in the beginning of the process, isn't it? Or you will just order one book right now, one book after 3 months, one book after 6 months. No, you will order all the books. So in case you have to prepare this shirt, the whole of the cloth is to be issued in the beginning. Or you will be like, no, half meter today I will issue, half meter I will issue after 10 days. Is it possible? No. So you take whatever is the cost to be incurred on material, material cost is incurred, but labor and overheads, they keep on working throughout the period. Right? Now, if you are a CA student, you are not going to put all your labor efforts in one day, isn't it? You will put your efforts throughout the period. So we'll take the average cost there, that is 50%. So this is the logic behind taking material as 100% and labor and overheads as 50%. Degree of completion for WIP. For finished goods, it is always going to be 100%. Is this much part clear? Yes, guys. Is this much part clear? Yes. Any doubts in the degree of completion part? So please take the degree of completion very carefully. Right? Now I'll tell you how to prepare the statement of equivalent production. I'll take an example where I will take everything. I'll take the normal loss also. I will take abnormal loss also. I will take closing WIP also. Right? Now, Okay, degree of completion for abnormal loss I'll discuss later on when I'll come to abnormal, or I'll write here. Okay, right here. Now for degree of completion, if we talk about the degree of completion, coming to degree of completion, coming to degree of completion. So I'll give you the summary for this degree of completion. Degree of completion for finished goods. Degree of completion for finished goods, it is going to be 100%. Right? Degree of completion for closing WIP, as I have discussed with you, either given or material as 100% and conversion cost as 50%. That is labor and overheads. Degree of completion for normal loss. Normal loss not required. And the degree of completion for abnormal loss. For abnormal loss or gain. Degree of completion for abnormal loss and gain. Again, there can be two situations. One is given in question. If it is given in the question, well and good, you will take that particular part. If it is not given in the question, in that case, you will take 100% for all cost. Right? If it is not given in the question, then you will take 100% for all the cost. So these are the rules regarding the degree of completion. For finished goods, 100%. Closing WIP, either it is given or you will take material 100%, conversion cost 50%. Normal loss, it is not required. Abnormal loss or gain, either it is given or it will be 100% for all cost. Simple rules. Right, now let's take up one example. In that example, I'll explain that how to prepare a statement of equivalent production, how to calculate the cost per equivalent unit, how to calculate finished goods, closing WIP, abnormal loss, prepare the process account. Everything I'll cover in just one example, right? So everything will be clear, basics will be clear. Then we have, till now we are talking about closing WIP, then we will, opening WIP will enter. In case opening WIP is there, then we have two methods, FIFO method and weighted average method. Then we'll talk about that. Okay. So write down one example here. Write down one example. Right, we will solve one example. Very simple. Input is 10,000 kg. Then finished goods, that is fully processed. We have finished goods, that is 7,000 kg. Then you have closing WIP. Then you have closing WIP of 1000 kg. Then you have a normal loss. You have a normal loss of 1000 kg. Then it is given scrap realizes. Scrap realizes ₹1 per unit. Right, now it is not mentioned that whether the scrap is only for normal loss or is it for both normal and abnormal loss. So it is for both normal and abnormal loss. Clear? Scrap realizes ₹1 per unit. Then it is given material cost incurred. Material cost incurred is ₹20,000. Then labor cost incurred is ₹9,000 and overhead cost again is ₹9,000. So this is what is given to you. Input of 10,000 kg, finished goods of 7,000 kg, closing WIP of 1,000 kg, normal loss of 1,000, scrap ₹1. Written, everyone? Okay. Now let's try to solve this. So we'll see how to prepare a statement of equivalent production. With just one example, I'll take all the adjustments in this only. Let's first prepare. The first step will always be the preparation of statement of equivalent production. Statement of equivalent production. Statement of equivalent production. Now, what is there in the statement of equivalent production? Listen to it very, very carefully. What is the format here? The first column that we prepare is input. First we take what is the input, right? How many units we are inputting. Then it will be particulars. Then it will be output. Then we will write all the cost, right? Then we will write material cost. In the material cost, we'll make two columns. One is the percentage, that is your degree of completion. Another column will be quantity. Similarly, the next column will be labor cost. Again, for labor, degree of completion and quantity. Similarly, you will take overheads. That is percentage, degree of completion and quantity. Right? Okay. So what is the input here? Always remember one thing, what? Input should be equal to your output. So here also we have to always remember input should be equal to your output. So what is the input here? Input is 10,000 kg. So in the input column, I'll write here 10,000 kg. Now we have to give the record of this 10,000 kg. What you did with this 10,000? They say, sir, 7,000 is your finished goods. So in the particulars, I will write what? I will write here finished goods. I'll write FG. Okay. I'll use the little bit of short forms. FG. 7,000 units. Now for this completed units, for this FG, what will be the degree of completion? I just gave you the rules. For FG, the degree of completion is 100%. So I'll write here material 100%, that is incurred on 7,000 equivalent units. 100%, 7,000, 100%, 7,000. Right? After that, next is a normal loss of 1000 kg. Now what to do with the normal loss? Here I am having a normal loss of 1000 kg. In case of normal loss, always remember, you will not write anything in the equivalent production. You will not write anything because of the fact that normal loss will increase the cost of the good units, right? So here no good units are there. You will not write anything in the material, labor or overheads. Then what is given? The closing WIP is given as 1000. You are given closing WIP of 1000. Now, what is the degree of completion? Rules for degree of completion for closing WIP not given in the question. So material 100% and conversion cost, that is labor and overheads, you will take it as 50%. So for closing WIP, for material you will take 100%, that is 1000 units. Here you will take 50%, that is 500 units. Here you will take 50%, that is 500 units. Now, input should be equal to your output. Your output is 9,000 units. 7,000 finished, 1,000 normal loss, 1,000 is your closing WIP. Right? So what else will be there? The remaining 1,000 will be your abnormal loss. The remaining 1,000 will be your abnormal loss. Now, what are the rules for abnormal loss? As I told you, if it is given in the question, well and good. You will take that degree of completion. But if the degree of completion is not given in the question, then what will you take? 100%, sir. Very simple. So 100%, 1,000. 100%, 1,000. 100%, 1,000. Clear? So now your input is how much? Now your input is 10,000 kg. Your output is how much? Your output also is 10,000 kg. Now, what is the equivalent units on which the material cost is incurred? So the material cost is incurred on 9,000 units. Labor cost is incurred on 8,500 units. Overheads cost is incurred on 8,500 units. This is what we call it as, equivalent production, on which the cost has been incurred. This is what we call it as equivalent production. This is your statement of equivalent production. Tell me if it is clear. Yes, please let me know, guys, if it is clear to you. Is the statement of equivalent production clear, everyone? Yes, statement of equivalent production is clear. Okay. So next, after this, what we are going to prepare? So after this, we are going to prepare our statement of cost per equivalent unit, right? So second step that we are going to make is, the second step that we have is statement of cost per equivalent unit. Statement of cost per equivalent unit. Right? Statement of cost per equivalent unit. So what will you do here? What is the format for this? You will write here particulars. So particulars will tell you what all cost is there. Particulars. What is the total amount of cost? What is your equivalent units? Right? Then you have cost per equivalent unit. Cost per equivalent unit. Right. So what is the first cost that is incurred? See here it is given, the material cost is incurred 20,000, labor cost is incurred 9,000 and overhead cost of 9,000. Material cost incurred 20,000, but stop here. There is a scrap value of the normal loss. There is a scrap value given, scrap value given 1 rupee. Right? This scrap value is applicable to both normal loss and abnormal loss. Isn't it? The scrap value is applicable to both normal loss as well as abnormal loss. Is it applicable? Yes, sir. It is applicable to both normal as well as abnormal. Correct? Now, this scrap value will reduce what? This scrap value will reduce your material cost. But when you are reducing your material cost, which scrap value will you take? Whether both normal and abnormal, or will you take only normal? Will you take only normal or you take normal and abnormal? Here you have to remember very clearly that when you are reducing your material cost here, you have to take only and only the scrap value of the normal loss. Why? Sir, abnormal loss scrap value, we always take it in the abnormal loss account, not in the process account. Right? So here it will not reduce your material cost. It will just reduce the loss which you were taking to costing P&L. Listen to it very carefully. What I'm saying is the scrap value of the abnormal loss. Scrap value of the abnormal loss will reduce what? Will reduce only the amount of loss which you were taking to costing P&L. It will not impact your process account. So here you will take what? From the material, you will subtract scrap value of normal loss. Normal loss is 1000 units, on that 1 rupee of the scrap value. So you will take 1000. So your net material cost is 19,000 on how many equivalent units? That is material, yes, 9,000 equivalent units. So you'll take here 9,000 equivalent units. So your cost per unit will be 2.111. Take it to 3 decimals. Take it till 3 decimals to 2.111 you can take, right? Okay, sir. Fine. Next, Next. The labor cost. Next we have is labor cost. Labor cost is incurred on, what is the amount of labor cost? 9,000. On how many units? On 8,500 equivalent units. So 9,000 divided by 8,500, that comes to 1.059. Similarly, the overhead cost will be there. Similarly, the overheads cost will be there, 9,000 of cost on 8,500 of equivalent units, that is 1.059. This will tell you the total cost incurred per unit, 2.111 plus 1.059 plus 1.059. So that comes to 4.229. Right? So this is the total cost. This is the second thing, that is statement of cost per equivalent unit. Please be very careful with the scrap value part, that here you have to take only and only the scrap value of the normal loss. Abnormal loss, abnormal gain, any scrap value you will not take here. Abnormal loss scrap value, you will take it in the abnormal loss account. Not here, not here, not here, not here. Absolutely not here. Correct, normal. Is the statement of cost per equivalent unit clear, guys? Please let me know. Is the statement of cost per equivalent unit clear to you? Any doubts in this part? Then I will go to the next part, that is valuation of finished goods, valuation of closing WIP. Clear? Okay. Now we'll do the valuation of finished goods. Based on this, what we'll do? We'll do valuation of finished goods. Valuation of finished goods. Now, how many finished goods you have prepared? If you see the statement, there are 7,000 finished goods which are prepared. Yes, sir. On these 7,000 units, is the material cost incurred? Yes, sir. Is the labor cost fully incurred? Yes, sir. Is the overhead cost fully incurred? Yes, sir. So that means, can I say on these 7,000 units, this 4.229 is incurred? Yes, sir. So valuation of FG will be, how many units of FG? 7,000. On that, 4.229 is the cost incurred. So that comes to 29,603 rupees. This is the value of that your finished goods. This is the value of your finished goods. Next we will have valuation of, next we will do valuation of closing, valuation of closing WIP. Right, next we'll do valuation of closing WIP. Now this closing WIP we will categorize into three parts. Material cost. Now see, the material cost is incurred on how many equivalent units? Just focus on this closing WIP here now. The material cost is incurred on 1,000 units, whereas labor and overhead cost is incurred on 500 units. So here when you are taking the equivalent units, please take it very carefully. Do not take 1,000, 1,000, 1,000 for all the three categories, or take 500, 500, 500 for all the three categories. So please be very careful when you are taking the equivalent units. This is a very common mistake when calculating the closing WIP. You have to take what? You have to take the equivalent units. So here the material cost is incurred on how many units? On 1,000 units, 2.111. Labor cost incurred on 500 units into 1.059, and overhead cost 500 units into 1.059. Right? So this will be 2,111. Then 500 into 1.059, that will come to 530, and here also 530. So this will be the total value. So this will come to 3171. This is your valuation of closing WIP. Similarly, now we will do the valuation of abnormal loss. Obviously, sir, abnormal loss valuation, we have to take it to the costing P&L. So you will have to value the abnormal loss also. So third thing that you have to do is valuation of abnormal loss. Valuation of abnormal loss. Right? How will you value abnormal loss? Again, in this particular case, if you see, the abnormal loss is incurred on the degree of completion is 100% for all the cost. So you can take it just like the finished goods. But in the question, in the exam, if the degree of completion is different for material and labor and overheads, so you will do it just like this closing WIP. How? Sir, material cost incurred on how many equivalent units of abnormal loss? Equivalent units of abnormal loss, that is 1000. In this case, you can directly take it total also. So here also 1000 into 1.059. Right? And for overheads also, it can be 1000 into 1.059. So it is 2111, 1059 and 1059. This will be the total value. 2111 plus 2111 plus 1059 plus 1059, that comes to 4229. This is the value of your abnormal loss. Okay, please let me know if this valuation is clear to you guys. Yes, if this valuation is clear, everyone. Please let me know. Yes, valuation is clear. Okay. Now, the last step that we have is preparation of process account. From this information itself, whatever the information that we have gathered, if we have to prepare a process account, sir, how can we prepare a process account now? Because in the exam, this can be a complete question. Process account, where they ask you to prepare statement of equivalent production, statement of cost per equivalent unit, then process account. So all the valuations are a part of this. So if you have to prepare a process account here, what will you do? You will take here to material. What is the material introduced here? What is the material introduced? That is, input is 10,000. So you will write here material 10,000. What is the value of that material? That is 20,000 rupees. That is the cost of material. Then labor cost. What is the labor cost incurred? That is 9,000. What is the overhead cost incurred? That is 9,000. On this side, you will take normal loss, 1000 units, 1 rupee scrap value. So 1000 is your scrap value by abnormal loss. By abnormal loss. Now, abnormal loss value, you will take it as this one, 4229 that you have calculated. 1000 units, 4229 by closing WIP. By closing WIP, now you will take for this, you will take this 3171, right? 1000 units, 3171, and by finished goods, by FG 7000, the remaining value you take it here, because of decimals there can be a slight difference. So what you do is take the total here, that is 20,000 plus 9,000 plus 9,000. That comes to total of 38,000. Right? So 38,000 minus 1000 minus 4229 minus 3171. You will get the value as 29,600. Here the valuation of FG that we have done is 29,603. So 3 rupees difference, that is because of rounding off. Right? So this will give you your process account. So you can write a note here that the difference in the finished goods, the rounding off difference we have adjusted in the finished goods. That's it. That is acceptable. Because of the decimal rounding off, the difference is there. So this is your complete question from statement of equivalent production to statement of cost per equivalent unit to valuations to process account. This is the complete process. Go through this complete process and tell me if you have any doubts in this complete process. If you have understood this, then after break we'll do FIFO method and weighted average method, where there will be the entry of what? Where there will be entry of opening WIP. Then we'll do that. We will do that. Yes guys, any doubts in this particular part? If you have, please let me know. Clear everyone? This complete process is clear. Why I have taken this one particular example is so that with just one example we are able to do everything. No? Okay, then it's 7:35. Let's take a 20 minutes break. Then we will resume. Then we will do the FIFO method and weighted average method. That will be the last part. After that, one small topic, inter-process profit is there. That also will do. Right? So let's take a break. Have your dinner. Enjoy for 20 minutes. Yes, everyone, we are back. So please let me know if you guys are back. Please let me know if you guys are there. So we will start with the next part. Let's resume. Yes, rest of the people, please confirm once if you guys are back. So we'll start. Yes, okay, fine. So let's start with the topic now. Now, till now we have been talking about only closing WIP, the valuation of closing WIP and all. What if there is an opening WIP also? In that case, how to deal with the things, right? So this is one thing that you have to see. Okay, I'll import one file here. Just wait for a minute. Just wait for a minute. I'll just import one file. I'll import one format so that it is easy. Saves time for us. Okay. Yes, fine. Now, what if there is a opening stock also given to you? What if there is a opening stock also given to you? Then how to deal with it? Again, I'll take one example that I always take in my lectures also, right? With that lectures only. Now, in that case, there we will have two methods. One is your FIFO method. Another one is your weighted average method, right? I'll take one example. So we will solve that example and we will be able to understand how to deal with it. Write down. So if you have already written in my regular batches, that's fine. So you can just listen to it. Now I'm saying is, in the particular month of April, I input 10,000 kg. What is my input? My input is 10,000 kg. Right? Out of this 10,000 kg, what I'm saying is I converted finished goods 6,000 kg. 60%, this is 100% complete. So that means the degree of completion for this will be 100%. Another set is my closing WIP. So here I'm having a closing WIP of 4,000 kg, for which the degree of completion material is given as 100%. Conversion cost is given as 25%. This is the degree of completion that on these 4,000 units which are in WIP, on that material cost is 100% incurred, whereas conversion cost is incurred to the tune of 25% only. Now, what is the cost incurred here? In this period, what is the cost incurred? I'll take the cost incurred. Cost incurred, material is 6,000. Material cost incurred is 6,000, and the conversion cost is rupees 2,000. This is the cost incurred on these 4,000 units. That is the closing WIP, right? This is the cost on WIP. Now coming to the next month. In the month of May, what will happen? In the month of May, you will complete this opening WIP also? Yes or no? Yes, sir. So in the month of May, this closing of month of April, you will have a opening So you will get it as opening WIP 4000 kg. And you are having a fresh input. You are having a fresh input of 16,000 kg, out of which you have completed your FG is 10,000 kg and your closing WIP is 6,000 kg. On this, degree of completion is given to you that for material it is 100% and for conversion cost it is 33.1/3%. That is 1/3 of. Clear? And so for this opening WIP, what will you do, sir? In the month of May, you will be completing this opening WIP. Obviously, sir, we will be completing this opening WIP, isn't it? So when you are going to complete this opening WIP, what will be the degree of completion now? What will be the degree of completion for material here? For material and for conversion cost in the month of May. In the month of May, the degree of completion for the material will be 0. Why, sir? We have completed the units. So why it will be 0? It will be 0 because the material is already 100% incurred in the previous period. So in this period, there is no work done on the equivalent units. There is no material cost incurred. So we'll take material as 0 and conversion cost. 25% is incurred in the previous period. So in this period, how much will you incur? In this period, you will incur only 75%. Right? In this you will incur what? In this you will incur 75%. Is that clear? So you will incur 75% in this particular period. Okay. And the cost incurred in this period. Okay, write down the cost incurred in this period. So I'll write here cost incurred in the month of May. Whatever is the work done in the month of May, whether on opening WIP, whether on fresh input, what is the cost incurred? That is material cost of rupees 25,600 and conversion cost of rupees 30,000. This is the cost incurred for the month of May. Whatever is the work done in the month of May. Whatever is the work done in the month of May. This much is clear, guys. So this is the complete question for you. Right? Now, to solve this part, if we have to do the solution for the month of May, for the month of May, we have to find out the valuation of finished goods. We have to find out the closing WIP valuation. So we will prepare what? We will prepare statement of equivalent production for the month of May. We will prepare the statement of cost per equivalent unit for the month of May. We will prepare what? We will prepare valuation of finished goods, valuation of closing WIP. But for this, we have two different methods. One is called as the FIFO method. The FIFO method says that in the month of May, first, you will always complete your opening WIP. Then you will work on the fresh input. The weighted average method says, sir, I don't know what I am processing. No, yes, normally opening WIP I will complete, but I don't know whatever I am completing is whether opening WIP or from the fresh input. Right? So there is a slight difference in the treatment of two. So this question, this is the question now with you. First I will solve it by FIFO method. Then I will solve it by weighted average method. Let's do it. So I have having the format here. So first I will do it by FIFO method for the month of May. First thing I'll do is prepare the statement of equivalent production. Statement of equivalent production. Right? Statement of equivalent production. Ashirwad, for May 27, which batch you want? The recordings are already available. Recordings are already available. Face-to-face batches for May 27, one batch will be in September, another batch will be in January then. My face-to-face batches will be there in Punjab. Right? Otherwise, the recordings are available. Recordings you can join right now also. Just the updations will be RTP, MTPs. That's it. Okay, the statement of equivalent production. Now, what is the input here? If you look at the example, what is the input in the month of May? One is this 4,000 kg, that is the opening WIP. Another one is 16,000 kg. So your input is 4,000 and 16,000. Right? Now, the FIFO method says what? The FIFO method says first you will complete your opening WIP. So I'm saying, okay, we completed our opening WIP in this period. How many units? 4,000 units I completed. Now, how will you take the degree of completion? That is why I've written the degree of completion here. Will there be any degree of completion? Is there any material cost incurred on this 4,000 units? No, sir. Material cost was incurred in the previous period only. In the previous period, 100% of the material cost was incurred. In this period, is there any equivalent units on which the material cost is incurred? No. Right? So, here material I will not write. What about the conversion cost? I'll write here conversion cost. I'll write here conversion cost. So, conversion cost here will be 75%. That is on 3,000 equivalent units, the cost is incurred. Clear with the opening WIP? See, in terms of costing and financial management, there is no change in the syllabus. Right? There is no change in the syllabus. For costing and FM, there is no change. So you can follow the recordings. That's no issues. Costing and financial management, they are the static subjects. Practically there are no changes in that. It's just the questions they do here and there. Rest everything remains same. Okay. Okay. Opening WIP done. Then finished goods. How many units you have converted into finished goods from the fresh input? This is from the fresh input. From this 16,000. That is 10,000 units. Degree of completion will be 100%, 100% and 10,000. Right? Then after that, you have a closing WIP. Closing WIP of 6,000 units. Degree of completion is given to you. See here, the closing WIP degree of completion is given to you. 100% and 33 1 by 3%. Okay, there was a slight drop here. So guys, are we back? Are you able to see? Okay guys, can you listen me now? Now we are back. Okay, please let me know if I'm audible, now able to see. Yes, rest of you people also confirm once if it is fine now. So there was some connection, some internet issue, something was there. I don't know what happened. Don't know what happened there. But now it's back. Yes, everyone able to see? Fine now? Okay. Okay. Now we are going to resume, right? So for the closing WIP, as we were talking about, there is a degree of completion which is given. But now it will be smooth. It will be smooth. Now I think it is smooth. Is there any lag? Still lag? Because from my side it is showing full strength now for the network. In between there was You're still facing some lag, guys. Please let me know. Now clear. Okay, fine. So for the closing WIP, done. For the closing WIP, the degree of completion is given to you, material 100% and conversion cost 1/3. So I'll take here for material 100%, that is 6,000, and 33 1/3%, that is 1/3, that will be 2,000 units. So this will give you an input of 20,000 and output of 20,000. Now, if there is any normal loss, abnormal loss, the treatment is same as we have discussed earlier. Right, the treatment is absolutely same as we have discussed earlier. No change in that. Now, here we will have material equivalent units 16,000, and here it will be 15,000 of equivalent units. Clear? So this treatment is to be done carefully, the opening WIP part, that how much of the degree of completion for material. So degree of completion, you will take that in this period, how much of the work is done. The rest of the work is done in the previous period itself. So you have to take that in this period, what work you are doing, right? Now we will prepare the statement of cost per equivalent unit. Next we will prepare statement of cost per equivalent unit. Statement of cost per equivalent unit. Right? Now, what is the statement of cost per equivalent unit? We know the format here, that is particulars. Then we have the amount, then we have equivalent units, and then we have cost per equivalent unit. Cost per equivalent unit. Right? So what is the cost that is incurred? Material cost is incurred. How much of the material cost is incurred in the month of May? It is given in the month of May, you have incurred 25,600, whether it is on the opening WIP or whether it is on the fresh input. So total of 25,600 is the cost on how many equivalent units? On 16,000 equivalent units. Right? So 25,600 divided by 16,000, 1.6. And what about conversion cost? Conversion cost is given, incurred is 30,000. 30,000 is the amount on how many equivalent units? That is 15,000. So 2 rupees. Total cost of 3.6. Total cost of 3.6 incurred. Right? Total cost incurred is 3.6. Up till this point, fine, sir. Now comes the valuation of finished goods, which requires special attention. Valuation of finished goods. Please do it very carefully. For the valuation of finished goods, see what is the finished goods here. The finished goods is some of the opening WIP goods were processed into finished goods. Some is from the fresh input. So we have to value it separately. Opening 4,000 units we will value separately. From the fresh input 10,000 units we will value separately. Then find out the value of what is the total value of those 14,000 units. Let's first talk about only the opening WIP. Opening WIP. Now, in the current period, what is the cost which is incurred in processing the opening WIP? What I'm asking is, in the current period means in the month of May, what is the cost that is incurred in the processing of WIP? Is there any material cost which is incurred in the processing of WIP? No, sir. There is only and only labor or the conversion cost which is incurred on equivalent 3,000 units. That is, this 2 rupees is the only cost which is incurred in the current period in the month of May. So can I write on 3,000 equivalent units, there is only 2 rupees of cost which is incurred. So total of 6,000. Right? And in the previous period. There is some cost on this opening WIP which is incurred in the previous period also. What is the cost which is incurred in the previous period, sir? This 8,000 is the cost which is incurred in the previous period. So we have to take that also. When we have converted it into finished goods, that means we have to take the total cost. Whether it is, whatever is incurred in the previous period plus whatever is incurred in the current period. Current period we have taken. Current period we have taken. So now we'll take it in the previous period. Add previous period cost. Add previous period cost. So the previous period cost is 8,000. That means the total cost incurred on this opening WIP is 14,000. Now what about the fresh input? From the fresh input completed units, how many? 10,000. On those units, what is the cost incurred? 1.6 rupees of material cost incurred? Yes, sir. 2 rupees of the conversion cost incurred? Yes, sir. So total cost incurred is 3.6. That is 36,000. So total value of finished goods is 50,000. Is this valuation of finished goods clear? Because this is the only little bit of a tricky part in case of FIFO method. Yes, everyone, please let me know if this valuation of finished goods part is clear to you. Any doubts in this valuation of finished goods part? Yes, everyone, please let me know if this is clear. Valuation of finished goods part. Yes. Okay. So let's move to the valuation of closing WIP now. So now we'll see how to value the closing WIP. So next we'll do valuation of closing WIP. Valuation of closing WIP. Now this WIP, how many equivalent units are there? 6,000. That is the material cost is incurred on equivalent 6,000 units. The conversion cost is incurred on equivalent 2,000 units. So you will take it accordingly. That's it. So valuation of closing WIP will say material cost incurred on 6,000 units into 1.6, that is 9,600, and conversion cost is incurred on equivalent 2,000 units into 2 rupees, that is 4,000. So total of 13,600 rupees of the closing WIP. Right, total 13,600 of the closing WIP. This is your closing WIP valuation done. In case there is an abnormal loss, similarly you can value it as we have done earlier. In case normal loss is there, abnormal loss is there, those treatments will remain same as we have done it earlier. Right? Those treatments will remain same as we have done it earlier. Clear? Now, if you have to prepare a process account here, they can ask you for the process account also. So if the process account is to be prepared, how will you prepare the process account? In the process account, you will write here opening WIP. So you'll write here to opening WIP. What is the value of opening WIP? 8,000. That is this cost which is incurred. This cost which is incurred. This is the value of opening WIP, 6,000 plus 2,000. Then you will write here material cost. What is the material cost incurred in this period? 25,600 to conversion cost. To conversion cost, you will take it as 30,000. Right? And here you will write by finished goods valued at 50,000 and by closing WIP by closing WIP of 13,600. So this total will be 63,600. Right? Total will be 63,600. Is the FIFO method clear, guys? So tell me about the FIFO method, then I will move on. The same question I will do it by weighted average method. Then I will tell you that in the exam, if the question is silent, which method to follow, how to decide which method to follow, I'll tell you that also. Yes, clear? Rest of the people, is it clear? Yes, Ranjana is clear, Vedant clear. Yeah. This example only I solve it in every batch. But there will be some students who will be watching who have not watched my regular batch. But this example I take it in every batch because it is simple to explain it with this one example. In every batch, even in my regular batch also, in face-to-face batch also, I take this example. Okay, now let's do the same question by weighted average method. Let's do the same question by weighted average method. Yes, that is why I take this one example. Weighted average method. For the month of May only we will be doing. Right? So now we'll do it by the weighted average method. Again, we will prepare statement of equivalent production. Statement of equivalent production. Statement of equivalent production. Right? Now, what is the input here? What is the input here? The input remains same, 4,000 units of the opening and 16,000 units of the fresh. Total 20,000 input. Now, when we are writing the particulars, now weighted average method says that whatever we are completed, it can be from the opening WIP, it can be from the finished, from the fresh input. We do not know. So in that case, what we will do is we do not write opening WIP separately. We just write whatever is being finished in this period. So we'll write here, we'll take the total, we write finished goods. So how many finished goods will be there? In this case, 4,000 kg plus 10,000 kg. This will be your finished goods. He says take the finished goods. Whether the work is done in the previous period, this period, I do not know. So total completed is 14,000 units. 100% degree of completion on these 14,000 units, 100% on 14,000 units. Right? It is 100%. Whether some work is done in the previous period or it is being done in the current period. Then you have closing WIP, that remains same. 6,000 units, 100% material, 6,000, conversion cost 33, 1 by 3%, that is 2,000 units. 2,000 units. Right, so here you will get 20,000. Here material cost is incurred on all the 20,000 units, and here you will have 16,000 units. So here we will not show opening WIP separately and the current period input separately. Here we are saying whatever we are processing, take it, whether from the previous period or whether from the current period, just take it. Very simple. Take the total quantity 100%. Then comes the statement of cost per equivalent unit. Statement of cost per equivalent unit. So we'll write here particulars, amount, equivalent units, and the cost per equivalent unit. Cost per equivalent unit. Okay, so what is the material cost now you will take? If in the statement of equivalent production, you have combined all the units. So in the cost also, you will combine all the cost, whether incurred in the previous period or whether incurred in this particular period. Here you have taken total units, total degree of completion, even if some work is done in the previous period itself. So here also we'll take that. Here now the material cost is what? 6,000 incurred in the previous period, 25,600 in the current period. Total 31,600 on equivalent units. How many? 20,000. On 20,000 equivalent units. So cost per equivalent unit is 1.6. What about conversion cost? Again, conversion cost also will combine 2,000 in the previous period plus 30,000 here. So total will be 32,000 on how many equivalent units? That is 16,000. So cost per equivalent unit is 2. Total is 3.6. Right? Total is 3.6. Comes out to be same, sir. Isn't it? Now you will value your finished goods. Now you will say valuation of finished goods. It will vary slightly. Slight variation will be there. You are saying 14,000 completed units. What is the cost incurred? 3.6. So on 14,000 into 3.6. So there will be a slight variation. 50,400. That's it. Then valuation of closing WIP will remain same. Valuation of closing WIP will remain same. That is material cost incurred on 6,000 units at 1.6. That is 9,600. Conversion cost incurred on 2,000 units at 2 rupees, 4,000. So total of 13,600. This will remain same. Is this clear? Weighted average method. So this weighted average method is comparatively easier. Comparatively easier, isn't it? So it is slightly easier. Yes, please let me know if the weighted average method is clear to you. Now, in all the questions of process costing, the methodology remains the same. And almost I can say 80 to 85% of the times you are getting a question on this. Statement of equivalent production, statement of cost per equivalent unit, prepare process account. So on this only you will get the question. 80 to 85% of the time. Rest of the times it can be on the process accounts. Clear? Okay. Now comes one very important thing. Sir, in exam, most of the times it will be given that the question is to be solved whether by FIFO method or by weighted average method. But if the question is silent, then how to decide which method is applicable? Because it has happened. It has happened, I'm telling you. Now what I'm saying is, if question is silent about the method, if question is silent, which method to follow? Which method to follow? If the question is silent on this, then what will you do? The first thing that you should do is, in this case, check the degree of completion of the opening WIP. What I'm saying is, check degree of completion of opening WIP. Right? If this degree of completion of the opening WIP is not given, then what will happen, sir? If the degree of completion of the opening WIP is not given, in that case, You can apply weighted average method. Yes. Can you apply FIFO method? Absolutely no. Right? So this happened in one of the exams where they did not mention which method to follow, and they have not given the degree of completion of opening WIP. So that was a hint that weighted average method is to be followed. So you have to be careful with this. If the degree of completion is given, then you can do it by any of the methods. Then both the methods are applicable. Right? So if the question is silent with regard to the method, then first thing you have to see is whether the degree of completion of opening WIP is given or not. If it is not given, then always you will apply weighted average method. Is it clear, guys? Yes. So with this, FIFO method also done, weighted average method also done, right? So in the notes also, yes, clear. Okay. So I have given all the methods, FIFO method, how to do, what is to be done, what all points to be seen, right? I have given everything here. Statement cost per equivalent unit, only current period cost, then valuation of finished goods opening WIP plus current period equivalent units into this. So important points to remember: abnormal gain will be same as abnormal loss, input column should be everything I have given here. That's why I'm saying this book I have prepared very carefully so that even in the last moment you are able to remember the things. For weighted average method also I have given everything. Valuation of finished goods, closing WIP, everything I have explained. I have explained with the example. Just here also I have given everything, each and every detail is given to you. Now the last topic which is there is inter-process profits. Now what is inter-process profit? That is the output of one process is transferred to next process. Till now what we are doing is, till now when we transfer the goods from one process to another process, right, when we prepared this process account, right, this transfer to next process is at cost, right? The inter-process profit says when you are transferring to the next process, then you have to take it cost plus profit, add the profit to this value. This is what is the concept of inter-process profit. Then whenever we are transferring it to the next process, we will take it cost plus the profit, right? We'll take it as cost plus profit. That's all about process costing concepts. Now let's come to the module. I'll take one question which is there on inter-process profit, that is illustration number 6. Right, illustration number 6 is there on the inter-process profit. So let's see this particular problem. Right. Okay, let's read this illustration number 6 on inter-process profit. A Limited produces product AXE which passes through two processes before it is completed and transferred to finished stock. The following data relate for the month of October. So process 1, process 2 and finished stock, three things are given. Opening stock is given, direct material, direct wages, factory overheads, closing stock, and the inter-process profit included in the opening stock. Right? Inter-process profit included in the opening stock. In the process 1 it will not be there obviously because process 1 is the first process. Now what they say is output of process 1 is transferred to process 2 at 25% profit on the transfer price, that is on the sale price. 25% of sale price, or it will be 33 1/3% of cost. The output of the process 2 is transferred to finished stock at 20% profit on the transfer price. So it is 25% on cost. Right? After that, stock in processes is valued at prime cost. That whatever the stock which is there, that is the closing stock. The closing stock is to be valued at prime cost. The finished stock is valued at the price at which it is received from process number 2. Sales during the period are 1,40,000. Prepare the process cost accounts and the finished goods account showing the profit element at each stage. So in the process 1, now the slight change in the format, I will say, particulars, total. In the total, what is the cost element and what is the profit element? This is what is done here. Fine, sir. So I'll take opening stock 7,500 given, direct material, direct wages given. After direct material, direct wages, they have calculated the prime cost here. Fine. After that, overheads and then total cost. On this particular side, what you have is transfer to process 2. First, the closing stock is there. The closing stock is given as 3,700. Transfer to process 2 we'll see later on. 3,700 closing stock. What will be the value? Now see what they say. The closing stock is to be valued at prime cost. What is the prime cost here? 33,700. Right? That if the total is 33,700, my cost is 33,700 only. So for 3,700 of total amount of closing stock, what will be the value? That is 3,700 because it's a first process. So 3,700. Clear? Now what is the profit here? See the profit here. What is the profit that you will earn, sir? Profit is on the cost. I'm saying 1/3 of the cost. So whether you will do 44,200 into 1/3, what will you do? What will you do? 44,200 is the total cost incurred, right? Out of that, 3,700 units are still in stock. How can you book the profits on the units which are still in stock? You have not transferred those units. So what will you do? This profit, how will you calculate, sir? This profit you will calculate 44,200 total cost. Out of that, 3,700 is still in the closing stock. So what you have is 40,500. On this cost, you will calculate 1/3 profit. That comes to 13,500. Right? So at what value you are transferring? At what value now you are transferring it to the next process? That is 44,200 plus a profit of 13,500 minus 3,700. 54,000 value of goods. This is 44,200, which is the cost, plus profit of 13,500. Out of this, 3,700 is still in the stock. So 54,000. What is the cost element in that? 40,500. Profit element 13,500. First tell me if the process 1 account is clear. Please let me know if process 1 account is clear. Yes, everyone. If the process 1 account is clear, any doubts in the process 1 account? Yes. Now let's come to process 2 account now. Process 2 account, the opening stock is given as how much? Opening stock is given as 9,000, right? This opening stock is what? Sir, this stock at one point of time, it would have come from where? It would have come from the process 1 only, no? Right? It would have come from the process 1 only. So in 9,000, 1,500 is your profit. So that means that your cost element is 7,500. So that is what is written here. Total 9,000. Cost element 7,500. Out of that, profit element is 1,500. Then you will record what is transferred for process 1. This part. Total value 54,000. In that, cost element is 40,500 and profit is 13,500. Then direct material, direct wages, then you will get your prime cost. Add overheads, you will get your total cost. Clear? Now, closing stock is given as 4,500. What is the closing stock given? 4,500. Now, this closing stock will have a profit element. Now, how will you find out the profit element? That is based on prime cost. Now, see here, total prime cost is 90,000. For a prime cost of 90,000, what is the cost here? 75,000. If the closing stock total value is 4,500 out of this, so what will be your cost? 75,000 divided by 90,000 into 4,500. So 75,000 divided by 90,000 into 4,500. That comes to 3,750. So this is the cost element and this is the profit element. Is that clear? Now, how the profit will be calculated? Sir, the profit will be calculated as total cost minus the closing stock into 25%, because it is given 20% of the transfer price, so it will be 25% of the cost. Sir, why are we taking 94,500 and not 79,500? The cost is 79,500. No, rest is profit element, sir. Just listen to it very carefully. What profit element we are showing? It is the profit for the previous process. It is the profit for the previous process. For this process, it will become a cost only. Isn't it? This 1,500 and 13,500, it is a profit for what? It is a profit for the previous process, process 1. For process number 2, it is what? For process number 2, it is a cost only. So how will you calculate this profit? Total cost of 94,500 minus closing stock, which is already there, on that we cannot calculate, into 25%. So this will come to 22,500. So what is the value at which the finished goods being transferred? 94,500 plus 22,500 minus 4,500. Check once. Plus 22,500 minus 4,500. Yes. In that, cost is this much, 79,500 minus 375. Rest is your profit element. Is this clear, guys? Process 2 is clear. Any doubts in process 2? Yes. Any doubts in process number 2? Clear? Okay, let's come to the finished stock account now. Finished stock is, opening stock is given to you in the question itself. Opening stock is given, closing stock is given, and the inter-process profit included in the opening stock is given to you. Right, so finished stock account they have prepared here. Opening stock, out of that, what is the cost element and what is the profit element given? Right, after that, whatever is being transferred from process 2, that is this particular value. This particular value. What is the total value, cost element and profit element? Right. Then closing stock, 11,250. How will you value this? Now, they say the closing stock is to be valued on what basis? On the basis of this particular part. This is to be valued on what? This is to be valued on the basis of the value which they are getting from process 2. That is, if the total value is 1,12,500, the cost is 75,750. So for 11,250, what will be the cost? 75,750 divided by 1,12,500 into 11,250. Right? So it will come to 7,575. The remaining will be your profit element. The remaining will be your profit element. Right? Now, the costing P&L. Costing P&L, we are taking the sales. Sales is 1,40,000. You are selling the goods for 1,40,000. Now, what is the cost of those goods? The cost of those goods is this particular part minus this. This cost is calculated as opening cost of 14,250 plus 75,750 minus the stock which is already there. Just check once. 14,250 plus 75,750 minus 7575. Right? So remaining will be your profit element. So what is the net profit that you are earning? The balancing figure will give you the net profit in this particular sales. This will give you the overall profit that you will earn from this total sales. This is your finished stock account. Is this question clear on inter-process profits? Please let me know if this particular question is clear. Now, inter-process profits, we are having just this question only. Now, one thing I want you people to try is this question number 4 is a very good question, right? Mark this question number 4 as important from the practical questions. We'll just read it. I'll explain it what basically this question, why this question is important and why this type of a question they have repeatedly asked in the exam. Right, this is important and this kind of a question they have repeatedly asked in the exam. Right, following details are related to the work done in process 1 by XYZ company during the month of March. Opening WIP of 2000 units is given and the value of opening WIP is given. This is the cost incurred on cost already incurred on opening WIP. Cost already incurred on opening WIP. Then material introduced in the process 1, 38,000 units at a cost of 14,80,000, labor cost and overhead cost. So this is the cost given to you. Then after that it is given the units scrapped is 3,000. Degree of completion is given to you. This is your loss. Closing WIP is 2000 units, degree of completion is given to you. Units finished and transferred to process 2 is 35,000 units. Okay, sir. After that it is given normal loss is what? 5% of total input including the opening WIP. So scrapped units fetch 20 paisa per piece. So what will be your normal loss? 5% of what? Opening WIP is 2000 units, fresh is 38,000 units. So 5% of total 38,000, total 40,000 units, right? So 5% of 40,000 units is 2,000. Now this question is important for this reason. If you see here, the unit scrapped is 3,000, total loss is 3,000 units. Out of this, your normal loss is 2,000 units and the remaining is your abnormal loss. So your abnormal loss is 1000 unit. And this degree of completion which is given, this is given for abnormal loss. Remember degree of completion for abnormal loss. As I told you, if it is not given, then we will take it 100%. But if it is given like this here, 100% and 80%, then we have to take it like this. That's the only different or important thing in this. Right? So with this, we are done with process costing. Rest all the questions are same lines, everything is same. Right? Case scenario, I have already uploaded the video. Case scenario is important. Do watch the case scenario video on this. Process costing case scenario video you must watch. It is a very, very important one. It's a very good question. right? So please do go through that particular question. Right, so with this we are done with process costing. Tomorrow we'll do joint and byproducts. Right, so that is a small part, joint and byproduct. We'll complete it tomorrow, and we'll see if the time allows, we'll go for standard costing also. We'll start with standard costing also. Okay, any doubts on the today's session, guys? Process costing, I think we have done it quite thoroughly, right? Because it's a very important chapter, and it is one of the most scoring chapters, I would say, because there is not much variety of questions which is there. Methodology in every question is same. So that makes it a very, very scoring chapter, process costing. Yes. Any doubts in this? So we are done for today. And for everyone, even for those who are watching it afterwards, if you are liking the videos, please let me know in the comment section, so that I get to know that you people are actually getting benefit from these sessions, right? So please do comment on the video so that we also get to know. No doubts? Okay, everyone else done? So we are done for today. See you guys tomorrow. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.